This is a return to the levels that existed prior to recent trade frictions. But it's a return under an agreement that promises much more for Canadians.
Well, Prime Minister Mark Carney came to China with one key objective, and that was to get rid of punishing tariffs on Canadian canola. Canadian canola producers have been paying tariffs 75 to 100%, depending on the product, and those tariffs are coming down now to 15% starting on March the 1st. And it's not just canola, there are other Canadian agricultural and agri-food products where we will also see Chinese tariffs drop. Think about lobster, think about some other seafood products. So that's good news. Agricultural products that have been facing steep tariffs, they will be coming off. Now
the global balance is shifting, and Canada just made a move no one in Washington was expecting. When Prime Minister Mark Carney stood in Beijing and calmly announced a landmark trade agreement with China, it wasn't just about electric vehicles or canola exports. It was a signal. A signal that Canada is no longer willing to sit quietly in the shadow of an unpredictable ally to the south. For years, Ottawa treated China as a disruptive force, even a threat. Carney himself once called Beijing the biggest challenge facing Canada. But now, standing beside President Xi Jinping, Carney delivered a message that stunned observers on both sides of the Pacific: engagement, not escalation, is Canada's new strategy. And that shift could send shockwaves straight through Washington. At the center of this deal is a carefully balanced trade-off. Canada will allow up to 49,000 Chinese electric vehicles into its market each year, at a modest tariff. In return, China will roll back punishing duties on Canadian canola, seafood, peas, and other key exports, duties that had been strangling prairie farmers and coastal industries for months. For Canadian exporters, this is enormous relief. Canola seed tariffs are expected to drop to 15%. Anti-discrimination tariffs on products like lobster and crab will be removed altogether. For an industry where China is the second largest market after the United States, this is not just progress, it's survival. Carney called it preliminary but landmark. And those words were chosen carefully. Because this isn't just a trade deal. It's a reset. For nearly a decade, relations between Ottawa and Beijing had been frozen. Tariffs piled on top of tariffs. Political mistrust hardened into economic damage. And Canada followed Washington's lead, imposing massive duties on Chinese EVs to protect North America's auto sector. China retaliated. Hard. Canadian exports were crushed. Prairie provinces felt the pain. And pressure mounted on Ottawa to find a way out. Carney did something different. Instead of doubling down, he leaned in. In Beijing, he framed the new partnership as realistic, respectful, and interest-based. No illusions. No blind trust. Just cold, calculated realism. And then came the line that made headlines across North America. Carney said Canada's relationship with China has become more predictable than its relationship with the United States. That single sentence may have landed harder in Washington than any tariff announcement ever could. Because predictability is power. For decades, Canada relied on the U.S. as its economic anchor. But in recent years, that anchor has become unstable. Trade threats. Sudden policy reversals. Presidents openly questioning the value of long-standing agreements. Even now, Donald Trump is attacking North American trade deals, calling them irrelevant. U.S. manufacturing continues to contract. And uncertainty dominates Washington's economic outlook. Carney sees the writing on the wall. That's why this China deal fits into a much larger strategy, one aimed directly at reducing Canada's dependence on the United States. The Liberal government has set a bold target: double non-U.S. exports by 2030, and boost exports to China by 50%. This is diversification by design. Critics, of course, were quick to respond. Ontario Premier Doug Ford slammed the EV portion of the deal, warning that cheap Chinese vehicles could hurt Canadian workers and close the door to the American market. He argued that China has been handed a dangerous foothold, without guarantees of domestic investment. It's a familiar argument. One that plays well in auto towns and border states. But Carney isn't ignoring those concerns. He emphasized that Chinese EVs will make up only about 3% of the Canadian market. A sliver. Not a flood. And he hinted that deeper investment, even manufacturing, could follow. More importantly, Carney understands something Ford's critics often miss. Economic security today isn't about walls. It's about options. By reopening trade with China, Canada isn't choosing Beijing over Washington. It's choosing leverage. Because a country with alternatives negotiates from strength. And that's exactly what may unsettle the White House. Washington has spent years trying to isolate China economically. Tariffs, restrictions, pressure campaigns, all designed to slow Beijing's rise. Canada was expected to stay in lockstep. Instead, Ottawa just proved it can chart its own course. Even as Carney reopened trade channels, he didn't abandon Canadian values. He raised human rights directly with President Xi. He reaffirmed Canada's commitment to democracy, sovereignty, and self-determination. His phrase for this approach was telling: value-based realism. Not idealism. Not surrender. Realism. Carney understands the world as it is, divided, competitive, and dangerous. In that world, engagement isn't weakness. It's management. And that philosophy fits perfectly with his broader vision of variable geometry, a world where Canada works through multiple overlapping partnerships as U.S. leadership retreats from the global stage. China is one piece of that puzzle. Qatar is another. Europe, Asia, emerging markets, all part of a strategy to future-proof Canada's economy. For Washington, this raises uncomfortable questions. If Canada can deal with China while defending its interests, why can't the U.S.? If allies start hedging, does American influence weaken? And if predictability matters more than proximity, is the U.S. becoming its own problem? Even within America, the cracks are visible. Michigan Governor Gretchen Whitmer recently warned that the U.S. cannot compete with China alone, and must work closely with Canada and Mexico. U.S. manufacturing has shrunk for 9 straight months. Anxiety is spreading. Carney's move doesn't threaten Washington directly. But it challenges assumptions. It shows that Canada is no longer content to be reactive. No longer waiting for U.S. elections or mood swings. No longer tying its future to a single partner. Instead, Canada is positioning itself as a flexible, pragmatic middle power, capable of engaging rivals without surrendering principles. That's what makes this deal so significant. Not the EVs. Not the tariffs. But the message. Canada will engage where it must, diversify where it can, and decide for itself. And in a world where even allies are unpredictable, that independence may be the most powerful move of all. Washington is watching. And it knows this wasn't just a trade deal.